Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look again on the gold market. So today we mostly will focus on the longer term charts of the gold, by the reason that actually on the longer time frame it's not many things to talk about. And the second reason is that currently, well, we have really important ongoing processes in the United States economy and Fed policy that mostly, well, shift the perspective on a higher time frame scale rather than in the short term. We think that current report that we have prepared on the gold market is very important and actually interesting to read, just because there we're taking a look at market performance in the nearest time. That could happen from the fundamental fundamental point of view. And we have come to the conclusion that in the nearest time, the gold market probably remains under pressure by the few reasons. First of all, it seems that the Jerome Powell and the Fed, using the statistics, the positive statistics, whether it's adjusted or not adjusted, but providing the positive background, could try to use it to struggle inflation as long as they could. Also, there is some actually psychological reason from the Jerome Powell itself, using the human being ambitions. He would like to become the new Paul Volcker, but not to take the defeat in the struggle of the inflation, not to lead economy and the country to disaster. That's why he probably will try to struggle inflation as long as they could, as long as United States economy will let him to do this. Since we have considered few other scenarios, in particular speaking, a default scenario in last week, which we think it's not really impossible currently. But combining of these two factors, we could say that quantitative easing in any way, whatever it way will be, whether it will be default, it will be just liquidity providing or something of that sort, inevitable right now. But the moment when they will start depends on the strength of the economy of the United States, and in fact the saving margin of safety in the United States. And as long as the actually statistics authorities in the United States will actually provide positive numbers showing that everything is going well. But even using the simple math analysis as we have provided last week tells you that with such amount of the budget deficit that the United States has right now, negative trade balance, and the level of the interest rates absolutely provides no even theoretical solutions that could lead to the so-called soft landing or something of that sort. It's just impossible in current situation. So it means that currently just a question of time when this high rate period will be over. And we suggest that probably it's not will be too long to wait. From that standpoint of view, it led us to create the most probable, by our view, performance of the gold market, the forecast of the performance. Particularly speaking, since in the nearest time, which is actually supported by recent statistics in the United States, in the nearest time, currently market understand that it was wrong in anticipation of the early Fed turning point, Fed pivot, and recent statements for Fed minutes and jump in recent inflation just proves it. So market currently is changing their opinion, and since we currently expect maybe 2-3 more rate hikes, it means that in the nearest 3-4 months, maybe even longer, gold probably will be under pressure. And the same story we could get from the picture on the monthly chart. You can see here our reversal from the 1950 was really caught very accurately and works nice, but at the same time it totally agrees with the fundamental background that we have currently, and unfortunately maybe for the bulls, at least for the speculators. I'm not talking about investors, because for the investors this is positive moment, but for the speculators who would like to buy gold, probably we have nothing to make them happy, because it is just 2 sessions until the end of the February, and you can see that market is ready to complete huge bearish engulfing pattern on the monthly chart, which is also becomes the reversal, bearish reversal month. This combination tells you that we could get downside action at least back to the 710 even area within the few months. Even more to say, if you think about and you will take a look at the gold market in the perspective of the pivot point framework, that's market inability to keep going higher to the pivot resistance one and drop back below the pivot point suggests possible action back to the pivot support one. Yes, it will be just a retracement in the long-term period, but it suggests return back to the pivot support one, which is a 16 even. So that makes us think that solid drop in an area of the 16, 17, it's rather wide, but we're speaking about the monthly chart, now looks not as impossible. And for the investors, it means one thing, that if you have taken our first advice to make the investment in the gold around 1650 area that we have considered last year, that might be another chance to invest more and increase your investment. And it tells monthly chart and overall situation suggests in the nearest 3-4 months we should get much better entry levels, if of course nothing outstanding will happen, because now we're living really in the tough times. But if everything will be relatively quiet, we could get much better entry opportunity than we have right now. That's what I'm speaking about long-term charts. In the shorter term, speaking on the weekly chart, if you remember, we talked about the bread and butter trade. Here you could see market stands slightly below this area. Market is not at the result, and currently the possibility of the bread and butter is still under question. But I would say that bread and butter trade, which means the pullback to the 618 resistance of the whole downward action, absolutely doesn't contradict to the monthly chart. Why? Just because every time when you see some engulfing pattern, it's always, or at least almost always, you could see minor pullback in the body of the pattern before the major extension starts. And this minor pullback might become particularly the bread and butter trade on the weekly chart. Maybe we will not achieve the 618 resistance. It could happen, but some pullback still could happen. So I am not withdraw totally the idea of the bread and butter trade here, but at the same time we have to be careful. We should not run ahead of the train trying to catch the fallen knife, and we have to watch for bullish patterns on the lower time frames before taking the position. Particularly speaking, if we'll take a look right now on the lower time frame, unfortunately at this point we do not have something special. Market's gradually is breaking for the confluence without any response. This is bearish sign. In general, on this way down we do not have any bullish signs at all. Market is not at the result. On the 4-hour time frame chart and hourly charts we have some targets. So for instance, on the 4 time frame chart we have the OP around 1790. Our suggestion that market probably will drop lower was really a lazy reaction on the COP target. It's been completed. Our target of the 1810 that we discussed on Friday also is done. Actually we have another one, rather 18 even, but currently it is impossible to say what reaction will be around these targets, around 1790, around 18 even, what patterns might be formed. We could suggest, yes, that maybe it might be some kind of a head and shoulders, but currently we can't point it with the definitely. So all things that we could do currently, if we're speaking about taking the long position, is to wait and see for the reaction. To take the position for the upward bounce on the weekly chart, we have to get clear bullish reversal pattern, which might be the butterfly, which might be hand shoulders probably, but it's still not here, so we need to wait. For the bears, very important moment will be as market actually stands, not at the result in any time frame, on the weekly, on the daily. It will be gradual and stable downside continuation. If we will not get any bullish patterns in the nearest time and market will keep going lower, it will show just how bears are strong right now, and it will tell us that we probably should not consider Brent body anymore and start searching another chances to go short, taking the position. So if you have short positions from this downward action that we talked about, this downward action, you probably could still hold them. Just do not forget to manage the stops. That's actually what we have currently. And actually the nearest week probably will become the vital for the Brent body trade, just because market is already stands near the support. It's already third week in a row below the 3x3, and that is actually some kind at the edge of the vital areas market. If it will just keep going lower, it will be too far from the current level, and in these circumstances probably we could count some pullback from the deeper standing support, but it will not be the Brent body at this time. It will be just pullback before a strong downward continuation. So let's see what we will get on the next week.